This is the third occasion where I've seen these kinds of move in gold. The first one occurred in the middle of 2011. The second occasion I saw this kind of action occurred just before August 2020. And then this is the third occasion.
Let me just sum up here for our audience what's been going on today. My colleague at Kiko News, Anna Golubova, has summarized it very well in an article she wrote today. I'll just read the first two paragraphs of her article here. The gold market was trading near daily lows after losing more than $70 and falling below $2,000 an ounce. The sell-off coincided with oil plummeting 10% and risk assets such as stocks and cryptos seeing strong gains. The commodities rally cooled on Wednesday with oil, platinum, silver, copper, wheat, and corn reporting losses. WTI crude fell 10% to $110, while Brent crude was down 11% at $114 a barrel. Gary, when was the last time you saw this level of volatility in the commodity space? It just seems to me that the markets are extremely, if I may use the word, bipolar right now. Is it going up? Is it going down? Well, it's doing both. What's going on, Gary?
Well, to answer the first part of your question, this is the third occasion where I've seen these kinds of move in gold. The first one occurred in the middle of 2011 when gold hit $1,920, which at that time was a record high. The second occasion I saw this kind of action occurred just before August 2020. And that, of course, is when we hit the new record high at 2,088. And then this is the third occasion, because considering that this rally began at the 1700s, about 1750 to 1790, and climbed well past 2000. I mean, it broke through 2000 just the other day like a hot knife through butter. What I can say is that I've seen this happen in 3 times. What I've never seen is the kind of intraday volatility that we have seen. And I'm really addressing Thursday, the 25th, when the actual invasion, when Russia invaded Ukraine, we saw gold trade from high to low with a price range of $100. And that's a tremendous range for a day. That's what we find a really strong rally to be. And the interesting thing is it oscillated all over the place. Now, we then had a steady climb. That climb has continued up until today, of course, today being the largest single-day drawdown that we've seen in quite some time. So that's the key. The key right now is there's 2 primary motivating forces behind how gold is going to react, whether it's going to continue to move up or down. The first one is the crisis in Ukraine. That geopolitical tension, of course, is very bullish as an undertone for gold. The second thing is we are still at a record high level of inflation. Yeah. CPI last month came out at 7.5%. We'll get a report tomorrow for the numbers for February.
Okay, let's just touch on that real quick. Tomorrow's report, what's your forecast?
Well, we believe that it's going to be higher, much higher. Now, the analyst forecast is predicting that it's going to move from 7.5 to 7.9. I wouldn't be surprised if we saw 8 or 8.1. And the reason behind it is the CPI, unlike the PCE, which strips out food and energy, the CPI brings that into the fold. Our readership and our viewers know that food costs have been spiraling out of control, and anyone that fills their gas tank knows that there's been a tremendous rise in the price of oil, which is what is used to make gasoline. Those 2 components are going to be the primary reason that we see inflationary pressures rise above the already 40-year high at 7.5%.
Food costs are going up. I'm just musing here. You know what we need, Gary? We need a food replacement pill. We just pop one, that's lunch. We pop one, that's dinner. I think that would solve a lot of problems around the world. Somebody should get on that. Okay, let's talk about gold's resistance level. Can we pull up a chart and take a look at gold's technicals? Now, some people, or I've talked to traders in particular, have noted actually even before today's price action that gold would see a major correction at around $2,000. It was having a hard time staying above $2,000, and they argued that the move up was too dramatic and too soon. And we're seeing that play out right now. Are they correct in hindsight? Well, in hindsight, they were correct. But was the move overstretched, Gary? Was it above what you would expect it to do right now at this current junction?
My personal feeling is that it wasn't overdone or exaggerated. The key to looking at current gold pricing is that it was based upon the crisis in Ukraine. The Russians have destroyed multiple parts of cities. There has been death and destruction, and it is kind of like the United States going to war against the Bahamas. I mean, the power of a superpower such as Russia can obliterate any small independent country, and that's what was driving it up. It hit a high really yesterday, the highest point at 2,075. But what's interesting is it opened below $2,000 yesterday and closed roughly at 2,050. So my sense was that resistance, the first level of resistance that I was plotting, came at 2,000. And I was saying that it could easily become the support level. Support and resistance are one and the same. It's a ceiling or a floor. In other words, once price goes up above it, it becomes a support area. As markets are trading towards that price point, it's a resistance area. It now has become resistance, but we have gold at 1996. So it's very, very close to 2000. The question is whether or not we will see a continuation of the selling pressure that started today.
I love how you're asking my question even before I ask it. You're reading my mind, Gary. This is how well we know each other. Excellent question. Can we see a continuation of this price trend?
Well, here's the thing. We have to acknowledge I'm a hybrid trader, meaning I look at fundamentals and I look at technicals. But gold's recent rise has been news-driven, absolutely fundamentally driven. The two things that I talked about, inflation and turmoil, a crisis in Ukraine. The announcement today was that President Zelensky is willing to compromise, and that's the first time he kind of backed down, and that's why we saw gold go down. Now, if an agreement is actually reached and Russia pulls its troops out of Ukraine, most certainly you will see some pressure in gold, and it most likely will go to lower pricing. If they cannot come to a compromise somehow, and the shelling resumes and Russia's troops remain in Ukraine, it's going to find support and could go up. And so I'm not trying to say it could go up or down. What I am saying is it will go up or down based upon the outcome of Zelensky's statements and the talks that are going to be held in the next few days.
It's interesting how you're pegging gold's future, literally, to what's going on in Ukraine. What happened to the Fed? What happened to inflation? Are those still dominant forces, or are those taking a back seat for now?
Absolutely. Now, it was both rising rates of inflation and geopolitical tension combined that created the kind of run we've seen. If you look at the chart that I have up on the screen, the recent move is almost parabolic. It's a very high angle. It's not straight up, but it's almost a parabolic move. And that was based on inflation at a 40-year high and Russia's invasion of Ukraine. Inflation is going to play a key component. Let's assume that the crisis in Ukraine is resolved. Does that mean that gold has nowhere to go and it will continue, will just drift lower? My answer to that is no, because inflation has to come into play and it has to be reduced until it's at an acceptable level. And we're very far from the Fed's target of 2% when we're predicting 8% with the CPI and I believe 6% with their preferred method, the CPE, to get from 6 to 2%. That's quite a ways to go. And so that is going to become front and center if the crisis in Ukraine is dissipated and resolved, then people will focus immensely on the current level of inflation and what the Federal Reserve, along with other central banks worldwide, do about it, which is to begin interest rate normalization.
What was interesting to me, Gary, is that the dollar, the US dollar, and gold have been moving in tandem upwards over the course of the entire month of February up until today. And so usually this doesn't happen. They typically move in opposite directions. On a sustained, not even on an intraday level, but on a sustained level over a period of time, whenever you have gold and the dollar move in the same direction, either up or down, what does that mean, Gary?
There's only a few instances where we've seen that happen. Now, the recent move has been really centered around Ukraine, because with the increased geopolitical environment that's there and the offshoot that it has been causing stocks to go dramatically lower. I mean, I think yesterday NASDAQ had a 8% drawdown. Then you have investors flocking to safe haven assets. Gold is absolutely a preferred safe haven, but so is the US dollar. And so you got both of them moving higher in tandem, when typically you have an inverse relationship or an inverse correlation between dollar and gold pricing. They tend to move in opposite directions. So that's when we saw it. The last time we saw that occur was was when the central bank was trying to resolve the recession, except what we saw in tandem was more stocks and gold both moving higher because they were printing money and the dollar going lower. So this is a very unusual scenario.
Yeah, it is an unusual scenario. Here's my question for you, Gary. It's a safe haven against what? You mentioned that they're both safe haven plays, where at least the sentiment is that we should be moving capital into safe haven assets, which is why they've both been moving in tandem. That I understand, but what is it a safe haven against? We didn't see equities collapse over the last month. There have been a few periods of volatility, but we haven't seen a major S&P 500, collapse down 25% over February. We haven't seen other assets like real estate collapse. This is in the housing crisis of 2008. So does this scenario in which the dollar and gold move in the same direction, does this scenario only happen when we have, let's say, a war or a major geopolitical uncertainty? I'm just trying to pinpoint the root cause of this safe haven demand here.
My sense is, of course, what you mentioned is absolutely a component of why we see dollar strength and gold strength happening simultaneously. However, even though we have not seen U.S. equities crash, if you look at any chart on the S&P, the NASDAQ, or the Dow, you've seen consistent days, even over the last 2 weeks, a consistent decline in pricing. So it's a safe haven against a risk-on environment that has switched to a risk-off environment. So they're moving money out of their stock portfolio. They're putting it in bonds for safety, which is supportive of the dollar, and they're putting it in gold. So while you're correct in saying we haven't seen a 25% price decline, we've seen a sizable decline, about 8 to 10% in the indices. And so that's why you're getting what we are seeing now, which is the dollar moving higher, or up till today, and gold moving higher at the same time.